Thank you for your interest in the Sunbelt Business Advisors Small Business Administration loan pre-qualification process for the business you'd like to purchase. I'm Brian Slipka, and as a current business buyer and owner, I understand the rewards, challenges, and responsibilities that come with business ownership. With Sunbelt, you are accessing a team of professionals with decades of corporate and small business experience in virtually every industry and business segment. Determining business value. Let's start with a brief overview on the advanced work that Sunbelt performs on each business listing. First, we review the financials and tax returns of the client who is selling the business and use evaluation tools like those used by banks to determine if the selling price of the business meets the debt service requirement guidelines of the SBA. Once we know the debt service requirements are met, we produce term sheets which suggest a possible transaction structure. Term sheets outline how the business could be financed by a qualified buyer through the SBA. All of this information is used to earn the listing and then market the business as one that is bankable or potentially readily financed by the SBA. Now what this does is it widens and deepens the buyer pool because less money is required as a down payment with SBA financing than a seller finance or conventional loan that banks offer. Coordinating access to SBA lenders. Once a buyer for the business is identified, we help gather the information needed to become a pre-qualified borrower. Then, we introduce the buyer, now a potential borrower, to 3 SBA preferred lenders, who then compete for their finance package. Our preferred SBA lenders can underwrite the loan entirely, in-house with no review at the SBA level. This process can speed up the finance and purchase by a good 3 to 4 weeks. Our services are provided to buyers at no cost. Our fees are covered by the referral agreements with each individual lender. Our proven process helps the seller get to the finish line. It helps Sunbelt close and fund the transaction, and it helps the buyer get lower interest rates and improved term structures because there are multiple lenders competing for the financing package. SBA-approved banks prefer Sunbelt processes. Banking professionals like the fact that we pre-qualify buyers and that we've already analyzed the business for debt service. Our process also helps reduce the bank's loan origination costs. In addition, because we are Minnesota's largest seller of companies, we provide banks with a steady stream of quality transactions to review. In fact, in 2021, we facilitated 60 SBA loans with a total loan value of over $68 million. This volume and leverage helps buyers get preference and the benefits of pre-qualification. SBA loan financing requirements. There are 7 basic requirements a borrower needs for SBA loan financing. Number 1, you must be a U.S. citizen or possess a working visa. 2, you must be purchasing a for-profit U.S.-based business. 3, you must not have had any previous SBA loan defaults. Number 4, you must not have had any personal or business bankruptcies in a minimum the last 7 years. 5, you need a minimum credit score of 675. 6, you need transferable skills relative to the business you're buying, and that's important. And 7, you must not have had any felonies. SBA loan personal guarantees. One thing to keep in mind about SBA financing is that borrowers with at least 20% equity in the new company must be co-applicants and sign a personal guarantee. Banks are required by the SBA to collateralize the personal guarantee, which effectively reduces the risk of the goodwill in the transaction. The bank will take a junior position or a junior lien on the primary mortgage holder for real estate. They do this for all applicants who possess at least 20% equity in the real estate relative to its current market value. So for example, as a borrower, if your home is worth $400,000 and you have 120 or 30% in equity, the lender will take a junior lien on that property. If you have rental property, a cabin or something similar, you can ask the lender to take a junior lien on that instead of your primary residence. If you decide to sell or refinance your home while a junior lien is on, the SBA program requires you to notify the bank and get their prior approval. If you do not own any property, the SBA cannot deny you financing if you don't have any collateral. Now, we've never had an SBA lender acquire a residential property because of a default. The lenders we work with are very careful who they lend to. They want to make sure their borrowers are successful. For example, if you purchase a business with SBA financing and get off to a rough start, the lending bank will frequently provide consultants at no cost. They'll expand your line of credit, provide more working capital, whatever they can do to prevent you from defaulting. They make their money through their preferred status, and defaults can contribute to them losing this preferred status. Bank-assigned life insurance. The SBA program requires each applicant to take out bank-assigned life insurance to protect the borrower and their estate in case they pass away before the loan is paid off. In that circumstance, the life insurance policy would pay off the balance of the loan. The estate executor, who you name for the loan and the business, would then own the business outright moving forward. These bank-assigned policies require the borrower to take a physical exam performed by a doctor. If the applicant fails the physical, they are not excluded from the loan application. Instead, a letter of denial from the physician is provided to the lender, and it becomes part of the lending package. The SBA also cannot discriminate against people who might have pre-existing conditions. Loan commitment letters. After full underwriting and lender approval, the SBA lenders provide loan applicants with loan commitment letters. These letters can come in the form of a 7A loan with a 10-year term amortization for business acquisition, and/or a 504 loan with a 25-year term amortization for real estate. A mixed-term 7A loan represents a combination of a business acquisition and a real estate loan. What if there's real estate involved? A business valuation is always performed by an accredited third-party valuation firm and is commissioned by the SBA lender that the SBA applicant has chosen to partner with for financing. If real estate is part of the purchase of the business, the SBA lender will request a separate real estate appraisal firm. Now, once the current market values for the business and the real estate are established, each must support the listed value allocated. If the business valuation and/or the real estate appraisal comes back lower than the allocated purchase price, the bank cannot lend against the transaction until the buyer and seller negotiate the purchase price to its supported price. Next steps: secure data room. As a participant in a transaction, Sunbelt will set up a secure data room. Buyers are notified by email regarding the specific documents required, which include a PFS 413 or personal financial statement, the last 3 years of business and/or personal tax returns, and a resume. You can confidentially and securely upload documents to the data room, which will be reviewed for liquidity and debt-to-income ratio. No credit checks are performed at this time. We review personal financial information with complete confidentiality. No personal financial information is ever shared with a business broker or anyone else. Thank you for trusting Sunbelt Finance to help guide you through the pre-qualification process. We're excited about helping you purchase the business you're interested in, and we're here for any additional questions you may have. Please contact any of our industry experts at Sunbelt Business Advisors. You can do so by visiting sunbeltmidwest.com, calling 612-455-0880, or emailing us at finance@sunbeltmidwest.com.